It all started in 2013, when a handful of pioneers entered the scene, and Crypto Valley was born. In 2016, the city of Zug began accepting Bitcoin as a form of payment, bringing in a flood of new blockchain and crypto businesses. In 2019, Switzerland's first two crypto banks emerged, and 2021 saw the birth of the Swiss DLT Act. Now, 10 years later, Crypto Valley has grown into the most mature and prolific blockchain ecosystem globally. And in the heart of it all, where ideas collide and possibilities ignite, is CV Summit 2023. This is the gathering of visionaries, pioneers, and disruptors from across the globe. A convergence of minds pushing the boundaries of blockchain and beyond. Join hands with the brightest minds, forge connections that transcend borders, and be a part of the fourth industrial revolution. Get ready for a journey beyond imagination. CV Summit 2023, where blockchain meets the world.
Ladies and gentlemen, it is my pleasure to now welcome up on stage for our first panel of the second day, the moderator of the next panel. Her name is Effie Pilarino. She is a Swiss-based global fintech influencer. Effie Pilarino. Effie, she will be moderating the panel on stablecoins, enabling stability and financial inclusion. And joining her up on stage will be the senior advisor of Edelcoin, Dr. Mattia Rattaggi, as well as the head of Crypto Europe from Visa, Maike Hoanong. We have the managing director of Coinbase Germany, Jan Sell. And finally, and last but not least, the director of EU Strategy and Policy from Circle, Patrick Hansen.
Hello, everybody. Although I can't see you all, I just want to make sure that you're up to an exciting panel today. If you think that stablecoins and fiat-backed stablecoins are boring, I'm going to change your mind. They are not boring. They are not anymore just the on-ramps and off-ramps to crypto exchanges. They are much more, and we'll be talking today about what needs they're filling, what's the potential, who are they serving, and what's the social benefit, economic, if you want, cumulative benefit of these stable coins within the innovation of payments and much more. So excited to have you all here. Please, take the opportunity to introduce briefly yourselves when I ask you questions. And I want to start with you, Maike. Thank you for joining. You are with a company that I think is one of the big fintech innovators, Visa, and who's not shy at all to rethink its business beyond cards. So what is the new announcement that you've made that I'm excited about, which is about cross-border settlements with stable coins, and you've already announced collaborations with merchant acquirers, WorldPay and Nuvei. So what is that serving?
Yeah, hello everyone. Thank you so much for having us and for the opportunity to talk a little bit of what we do in the stablecoin space. As mentioned, I am part of Visa. I don't think I need to explain who Visa is. And I'm responsible for our crypto business in Europe. And maybe before I explain a little bit about what the benefits are of that stablecoin pilot that we've done, I started saying how Visa maybe thinks about crypto, what that stablecoin settlement capability is, and then maybe we can touch a little bit on the benefits. Now, at Visa, We want to add value to all forms of money movement, whether that's within our own network or beyond our network. And as such, we support an array of ways to pay and to be paid. And we also study new technologies that may impact the future of payments, right? And so this settlement capability is basically an extension of our business, where we're looking into a new form of how money is being moved cross-border. And it's a really important milestone in our efforts to improve cross-border payments. Now, what is settlement? You probably never heard of it when you're not working in payments, but it's a back-end process that is part of the payment processing that happens at the end of the day, where money is being moved between thousands of institutions across the globe every day. Now, what that palette is it's an extension of the capability for these, in this case, acquirer participants, pilot participants, Nuvei and WorldPay, to receive the settlement in USDC via Ethereum or Solana network. Now, the question is, what is the benefit of that? It could be multiple benefits, right? It's still early. It's a piloting mode, but we believe that it could increase flexibility for those acquirers or also issuers. We've done a first pilot with Crypto.com in 2021 already. That it can increase the flexibility and the option for settling with Visa. And that flexibility, of course, can also translate into an increased speed. Blockchain enables immediacy, and so there is potential, obviously, to settle maybe beyond existing settlement operating hours. So that's it in a nutshell.
I mean, the frictions in cross-border payments are well known. So, as you said, we will see how this goes, but it's definitely a major innovation that everybody can benefit from.
Maybe important just to mention that it doesn't change anything at the consumer end. The way the consumer pays, that's all staying the same.
Yes, it's what happens behind the scenes, right? It's at the Rails level. Jan, with Coinbase. Coinbase is not just a crypto exchange, but help us understand how USDC stablecoins fit into the ecosystem and what kind of needs you serve through stablecoins for your clients.
Sure. Well, first of all, hi everyone. I'm Jan, Managing Director of Coinbase in Germany. Coinbase is a fairly large crypto exchange. You may have heard of it. We use USDC in a number of ways. I think we're quite finding more and more use cases for stablecoins. For example, we have an international derivatives exchange that we're in the process of setting up, where stablecoins also allow direct on-chain settlement, 24/7 settlement. Have a lot of benefits for institutional clients on that end. We also are able to allow basically free USDC send and receives on certain networks, including L2s like Base, the Coinbase's own L2, which makes for essentially free remittances for users that have Coinbase accounts in multiple countries or want to send USDC from one country to another. Similar kind of cross-border issues. We're also able to pass on certain rewards to certain users, allowing for almost a savings account type of situation for users that hold USDC in certain countries as well.
Interesting. And Patrick, we could have a whole session on the issues that you focus on, which are related to policy. With Circle, I wanted to ask you your point of view around the euro-backed stablecoin. I mean, admittedly, it's a latecomer to the fiat stablecoin market, which we all know is dominated by dollar-backed coins. What's interesting to me is that I see dollar-backed coins as helping the dollar sort of mitigate its decline as a reserve currency because it will be used more. But the dollar has been losing its reserve status not because the euro is eating into it, it's because of other smaller emerging coins. And we are not seeing any stable coins of those. We're seeing shyly the euro And I think that the capitalization is very low, like 44 million, right? Something like that. Tell us how you see the euro stablecoin and why we're not seeing more other stablecoins of these developing country currencies. Give us a picture at a more international level or a more global currency level of stablecoins.
Sure, happy to. And first of all, hi everyone, my name is Patrick. I work as Director for EU Strategy and Policy at Circle. And really glad to be here. It's actually my first time in Zug and quite impressed by the scenery. So kudos to everyone who lives here. So stablecoins and euro stablecoins specifically, you're totally right. The current market is entirely dollarized. I think it's like 99.6 or 7% of the market. And I think there's multiple reasons for that. I think the most important one is probably that right now the crypto markets are a little bit insulated from the rest of the economy and from the real world markets and even the traditional financial markets. And so in these, I would say, at least partly insulated crypto capital markets that exist today in CeFi and DeFi, the network effects of existing dollar stablecoins are just very, very hard to catch up because liquidity begets liquidity, and just building on top of the existing stablecoins makes everything easier, cheaper, and safer because there's just more liquidity out there. And so I would say that's probably the major reason why US dollar-denominated stablecoins have just such a massive advantage right now over other currencies. With respect to euro stablecoins specifically, I think one barrier to their adoption, at least in the past, was also the missing regulatory clarity that I'm also spending most of my time working on. And that has changed now, right? With the adoption of MiCA in the European Union, I think there's a clear path for euro stablecoins to be offered and to be used in a regulatory compliant and safe way. And so I would say, looking at these two trends I just mentioned, I am very optimistic about the future of euro stablecoins because I see a lot of developments right now that would suggest that we see, those two major reasons at least losing in significance. With respect to the crypto markets, I think what we're seeing is that the more speculative part of it is losing in importance relative to the total markets. So we're seeing, with respect to stablecoins, for example, that their market cap, has been pretty, I would say, constant over the last couple of months. There was maybe 10-15% drop compared to crypto trading, which dropped like 60 or 70%. So stablecoins are more and more used for, I would say, non-speculative activities, just used for payments, to store value, for example. And we're also talking a lot, I'm sure yesterday has been talked about that as well, the tokenization of real world assets, how crypto markets more and more interact and connect to the real economies and the traditional markets. And as that happens, I think in the European Union, both individuals but also companies will be incentivized to use euro units of accounts just for regulatory reasons, for tax reasons, accounting reasons, etc. So that's trend number one. And then the second one, I already touched on it. So the regulatory clarity, I think we have seen a couple of announcements already in the last few months of large institutional players entering the euro stablecoin market. We are obviously doubling down also on our efforts with URC. And so I'm pretty optimistic that euro stablecoins will gain in market share in the near future.
Patrick, what are the sort of top MiCA items that you would say you feel have the potential to unlock value going forward?
I would say the big piece is really just the fact that now there is a clear framework to operate under. And so every single company, startup, I don't know, even Zug-based startups are really, they just have to look at the existing rules that have been adopted, and they can tick the boxes. They look at the governance, the reserve requirements, liquidity requirements, etc. And they can build a safe and sound business model on top of that. And that's really a game changer. that, to be honest, does not exist in many other jurisdictions. So I think that could be an advantage for the European Union. There is some like details, especially when it comes to stablecoins, in the MiCA framework that are, I would say, challenging, with respect to some of the capital requirements, or even the fact that an e-money token, so a fiat-backed stablecoin under MiCA, will be both a crypto asset but also a form of e-money, and therefore count as fiat fund, and therefore will have to comply with like multiple different frameworks, like the e-money directive, potentially the payment service directive, but also MiCA. So these are just a few of the challenging items, but overall, the regulatory clarity trumps all of that.
Interesting. Mattia, over to you. You are an advisor to Edelcoin, which is not a fiat-backed stablecoin. It's backed by 5, I think, metals. So I want to ask you what need Edelcoin fulfills. And I'm curious because if we look at the gold-backed tokens that have been issued, for years from different issuers, they didn't really have that much traction. So what is the need that Edelcoin, you think, fulfills? What's special, and how does it fit in this stablecoin ecosystem that's growing?
Yeah, no, thank you for the question. On my side, I am, as you said, an advisor here in the space out of Zug in the Web3 space for 7 years now. And I like to, help project becoming stable startups at the end. That's what I do. Now to Edelcoin, well, first of all, of course, we don't have to discuss the need for stable coins because they are there. Suffice to, it's enough to say that on the volume-based, the first cryptocurrency globally is a stable coin on a volume-based. And amongst the top 10, there are 2 or 3 stable coins in market cap. So they fulfill 2 needs, right? One, they are really the blood of the cryptocurrency markets, without which they will not function as they do. And secondly, to the Visa case, they now also fulfill a role to expedite cross-border transactions with much less time and also less costs. There are a few use cases there that are really interesting. Now, the current dominating stablecoins are pegged to fiat, or to one fiat. And I think with Edelcoin, I like the Edelcoin project because I was approached by people that said we need something else. We need to try to go where the ball will be, or to push the ball in another corner and provide diversification to the market of stablecoins. So, the fiat-based basically stablecoins comes with, I think, 2 more or less major problems if you want to recognize them as such. One is that they are inflationary as much as the fiats. So the more you are exposed to a stablecoin pegged to the US dollar, the more you are actually holding US dollar, and that's it, and the purchasing power has declined steadily. This happens obviously with other fiat currency in general, particularly when you have hyperinflation. And the second problem is even major. It's about the reserves. The value and the trust in a stablecoin depends on the management of the reserves. If there are doubts about the management of the reserves, you are going to experience a run on your stablecoin. The last example that happened was in spring, when the USDC that invested, I think, 2 or 3% of their reserves in the Silicon Valley Bank was subject to a run because there were doubts that the Silicon Valley Bank would be viable, and the peg was lost for a few moments. So it tells the story, right? So the advantage of this Edelcoin is that there are 3 advantages. One is that it is pegged not to fiat but to 5 metals in this case. Therefore, perhaps you have a chance to actually hedge yourself against the deflationary influence on the fiat currency. The second is that the reserves is absolutely not invested because it is there even before the coin is minted, and nobody will touch it unless something happened to the place where they are held. They are there and they are not invested. You are not going to experience a financial risk on the reserves. And the third innovation is that for the first time, we have stable coins backed by portfolio of, in this case of metals, it could be a portfolio of currency. I mean, somebody tried a long time ago to do that. Yeah?
We know that one.
And this is an advantage because you experience these portfolio effects that can further stabilize the coin. So, did I answer all the questions?
Well, with respect to gold, the gold tokens have not been that big of a gold-backed tokens, bigger success. So why does this Edelcoin have some potential?
You think of the potential to become successful. Yes, I mean, the gold token, yes, has not been very successful. I think gold is a story that is an old soup, right, first of all. And secondly, I think it's only one metal. And I think third, you have it's bankable. Yeah, I mean, people can buy gold in financial or monetary form since ages. These metals that we are bringing to the markets, we are really bringing them. I mean, you can't buy them today, but in kind. And therefore, there is also this kind of new asset class that comes to the market as a byproduct of this Edelcoin. And maybe I should also stress that the pricing of these metals, which are all pretty rare and used in technology that are modern, the price of these metals is very stable in volatility terms because they are really priced by few institutes worldwide, recognized as such, and not that frequent. And therefore, they provide, in terms of volatility, a much higher stability than anything else.
When I hear you talking about this type of stable coin, I'm thinking, how we've blurred the lines between what we consider as payment options, if you want, our current deposit accounts and then the investment accounts. You're kind of blurring that and making it really bankable by tokenizing it. And we live in a world where we're going to have many options, right? So the question to you, an open question to all of you, is in this world where there's, the variety of stable coins, we haven't even mentioned the algorithmic because they've shrunk, but we're going to see even more backed by real-world assets. As we discussed yesterday, we will have central bank digital currencies, tokenized deposits, you name it, parallel to the innovations that are going on in the traditional now fintech world. So what do you think is sort of what will be the winner of stable coins or its position within this ecosystem? What do you think can be the differentiation? What should we be looking for? And also the question is, all these innovations are promising and delivering efficiencies, mainly in terms of cost, but also in terms of transparency and speed, which of course, speed in this context means money. So will the society as a whole benefit because we're reducing costs? I mean, I was looking at the numbers of payment revenues in the whole system in 2022, and it's $2.2 trillion. We can reduce that. That's a cost to the system, revenue to some companies. And then the question is, can we reduce that? Can we pass it, through to customers? So those two questions, feel free to give your opinions where you see stable coins within this competitive, if you want, environment.
Shall I start? So I think the key primitives and technologies, blockchain technologies, will be in the future deeply embedded in the ecosystem, right? And that may take a variety of forms. It may be a stable coin, it may be a CBDC, it may be a tokenized deposits, right? But then the question is, what will be adopted and what will be successful? And that, again, depends on a variety of factors. I think the regulatory certainty is a big one, to have safeguards and standards, which we don't have in all parts of the world. Just in Europe, we do have security now, but not in every part of the world. Another factor is also, I think, the product market fit, which we're seeing for stablecoins and some of the use cases, whether it's streaming micropayments or cross-border disbursements, there is a clear product market fit. But also, I think there could be other use cases for other types of digital currencies, for NFTs being deployed for identity, or DeFi for lending and borrowing. And so it ultimately depends on the product market fit and some of these other factors like regulatory standards. Now, whether it really can decrease the cost for society, I think from a Visa perspective, we believe that the technologies can surely improve the overall cost of how money is being moved globally. Right? It can decrease the cost, it can increase the speed, and if you increase the speed, it can, again, decrease the cost. And also financial inclusion, it's in the title, but we didn't really touch upon it yet. But it may provide new means for people who are underbanked or unbanked to access financial services. And so all of these things combined, I think, over time will certainly have the potential to be a benefit to the society overall.
I mean, as I hear you, comes to mind that demand for dollars in certain countries and regions is very high, and obviously stable coins in that respect are an innovation that helps financial inclusion because it gives that access to dollars that they wouldn't have otherwise. And in some of these countries, Africa and Nigeria are a great example where the CBDC there was not a success because people really wanted dollars. That's what they need, not a digital form of their own currency. So I guess it does depend. It's very different what we need here and what will be adopted here in Switzerland, right? And other. Patrick, I hear you smiling.
I'm personally super excited about the optionality of the future and just the different types of potential units of accounts, etc., that we could be using, and everyone is just free to essentially vote with his or her wallet, right? Which is great, and I think that's great for the market in general if there is innovation and competition. I think what we're seeing right now in the market is quite clear, though. If we look at the data, people want to use fiat-backed stablecoins. If we look at settlement volume, there's like 11 trillion settled through fiat-backed stablecoins in 2022. If we look at global holders, I think we're about like between 20 and 25 million global holders of fiat-backed stablecoins. Many of those are weekly or monthly users. So we see massive adoption of fiat-backed stablecoins all over the world with the benefits that some of you mentioned. And so, just looking at the near-term future, I think we should base our outlook on just real-world adoption data. And I think it clearly right now points to people want to pay with fiat as their unit of accounts today. How that will change in the future, nobody knows, and nobody can predict that. But I think for now, the product market fit and the adoption of fiat-backed stablecoins is quite evident.
Yeah.
I would just add to that. I think stablecoins, now that they've started to gain real traction also in the institutional market, are kind of an enabling factor for tokenization, right? Because the combination of stablecoins and the tokenized asset allow for real-time on-chain settlement, which provides settlement with a certain finality and all the good benefits that blockchain bring, and also the whole 24/7 and constant settlement. It's a very different world from the old world of traditional finance, where very little has changed in the many years that I worked in finance. If you still look at settlement times for a lot of those instruments, this is a real step forward, which would bring huge cost savings to those institutions that start to get involved.
So real-world asset growth will lift also stable fiat-backed stablecoin market.
Yeah, I think 2 points. I mean, financial inclusion needs to improve, and the cross-border transaction needs to become more efficient. And digital money in any form can help that, is helping that. Now, I think for the future, we will see a coexistence of CBDCs, because they are going to come, stable coins in all sorts of form, and tokenized deposits is a very strong proposition as well, because it comes directly from the regulated banking sector. I think that fiat-based stablecoin will continue to dominate simply because they represent the legal tender. But let the 1,000 flowers bloom. I mean, we need diversification, we need optionalities. And if I think about real-world asset-based stablecoins, they do bring a potential for hedging against loss of purchasing power, and they offer a much better precondition for the reserves. So these are two important atouts for the real-world based stablecoins that might make difference.
Is it fair to say that stablecoins, no matter what they are backed with, is really an innovation that is bridging the two worlds, the crypto world and the traditional world, and the fintech, the old school innovators? It's really one of those innovations that are bringing everybody together. Do you agree?
Yeah.
I wouldn't agree with the no matter what they're backed with part, but with the rest, yes.
Yeah.
That's a good one. Thank you so much for your insights.
Thanks.
I guess we will.
Thank you so much, Effie, and your panel on stablecoins. Thank you so much.